Well, still on to Global Business Report. Welcome back. MTN Group plans to sell at least half of its $655 million interest in newly listed Jumia Technologies. The move comes as Africa's biggest wireless carrier looks to pay down debt and enter new markets. A sell down of the 19% stake of the online retailer could happen before the end of the year. South African-based MTN first needs to wait out a half-year investor lock-in period that followed Jumia's successful share sale in New York. With us in the studio is the Chief Executive of Jumia Nigeria, Mrs. Juliet Anammah, who will tell us what we should know about the online marketing company. It's good to have you with us.
Good morning, and thank you very much for having me.
Indeed. Now, everyone is calling Jumia Africa's Amazon, as it were. Others say it's still too early to say. How does Jumia plan to grow, organically or any possible acquisitions, as it were?
Good question. We plan to grow in our existing markets. As you know, we're currently in 14 African markets. We're very disciplined in terms of the fact that we cannot carry more than a certain portfolio size at every point in time. So for us at this point, at the near term, is really concentrating on the markets where we currently are and growing our business along the three dimensions. So I would say one is consumer, always. It starts with the consumers, increasing adoption of consumers, growing in terms of the spread of our logistics network and our reach within the markets where we operate. And so also growing in terms of the number of sellers and the assortment that we have on the platform. And secondly, deepening the reach of Jumia Pay, which is a payment solution which we offer to our consumers on the platform. So it's largely organic for us in the near term, not new markets or new acquisitions or anything like that yet.
Right. Now, talking about the emphasis on the local market, domestic market, as it were, one would have expected, there was this uproar then that why didn't Jumia get listed on the Nigerian Stock Exchange, but had to go all the way to the NYSE. So what do you make of that?
Interesting question again. The thing is, what is listing? Let's start with that. Listing is about funding. It's about raising funds. Okay, it's about getting new funding to keep investing in the company and growing. And it's not just about getting the money. If you want, you could get money anywhere. I mean, we've always raised funding through private placement and so on. But it was also about what we wanted to achieve in the future. Okay, so we wanted funding, but we also wanted strategic support in the sense that you want investors who understand our business, understand the economic model of e-commerce. As everyone knows from the filing right now, we're not yet profitable. Okay. So you need investors who have seen this before with other platforms and therefore can say, yes, we understand the business model and we're ready to back them for the long term. So that's number one for us and very important. Number two, when you've done that, then you say, okay, let me look at all the potential exchanges that we could list at. All right. Where do you have a concentration of investors who have that understanding? And at this point in time, it happens to be in the US because they've seen it in Amazon, they've invested in Amazon, they've invested in Alibaba, they've invested in Mercado Libre in Latin America as well. And so it becomes a little bit easier when you're showing the same type of business model. Yeah. Having said that, it doesn't preclude that sometime in the future, we could have, a dual listing in another exchange. But this, to the point of your question, this was the rationale for that.
More or less the foundation.
A foundation, exactly, yes.
Very good. Now, there were reports that MTN wants to sell out of Jumia. Can you clarify on MTN's interest in Jumia, as it were?
First, I'm not in a position to speak on MTN's behalf or any investor's behalf for that matter. However, what I can clarify is that this fundraise, this listing was all a primary. So in other words, it's all about new investment coming in, not about existing investors trying to sell their shares. There is a 6-month lockup, which is standard, and at the end of that, investors would have the opportunity to decide what they want to do with their shares. Although I expect it to be a managed process as well. Okay. Having said that also, when I look at the size of MTN, this is my personal opinion now. Like I said, I'm not holding brief for MTN.
Very good.
Looking at the size of MTN and looking at its ambitions in the market, also looking at Jumia and where we are in terms of our burn rate. Our burn rate is roughly about 150 million euros per annum, right? Is that significant for MTN? I would argue not, but then that's my opinion. MTN will have to make their decisions and their call at the end of the day, what they want to do. Yeah.
Very good. Now, the e-commerce market is still very much a virgin territory in Africa. Nigeria, not immune to this, but disposable income is also another factor, and infrastructure still limited to a whole lot of individuals. How do you plan to succeed in navigating this difficult terrain, as it were?
Difficult terrain, also an opportunity in a sense, because, and that's why when we started, we didn't take an existing e-commerce model and then plugged it into Africa. It just doesn't work that way. Every continent has its own peculiarities, in terms of consumers, in terms of infrastructure, like you mentioned, in terms of sellers and all the different partners. So in our environment, we still see that the opportunity is immense. When you look at the fact that we have 453 million people who have access to internet on the continent, okay? You look at the number of people with smartphones, which is growing every year as the price of smartphones are dropping. Okay? Now, you may not be seeing the likes of transactions elsewhere in the large ticket transactions, right? But in a market where people still need to recharge their airtime, people still need to pay bills, people every day they buy basic grocery items, they buy basic items or fashion items or beauty items or items, home appliances and so on and so forth. All those transactions are still happening. They're still happening today offline. Okay. And all e-commerce is saying is, what percentage of that can we move from offline to online, right? Can we make it more efficient? Because there's a lot of inefficiency in the chain. And at the end of the day, the price that the consumer pays is really, really much higher than they should really be paying if there was a lot more efficiency in the system. So e-commerce brings in some efficiency and says, okay, how much of that offline spend that is currently happening can you shift online? So we're not trying to recreate new markets here. No, there's an existing market. We're using technology, access to data and data efficiency to be able to make it more efficient and make people buying services and products much more efficient. So on the consumer side, the opportunity is still there, like I said. On the infrastructure side, if you came into the market and you decided to replicate what you have in China or in the United States, where you have one or two big logistics players and all you need to do is plug and play into their network and you're done. In the States, Amazon probably all they need to worry about is that they have a relationship with UPS or USPS, and that's it. All of logistics is taken care of. Here is a fragmented logistics market, and so what we did was we invested in the technology to integrate all those fragmented players into one network. That way they use our systems, they use our tools, and we can make it more efficient. So I would say on those two fronts, they're done. The opportunity is still in the market. Yeah, so it's just for us to keep, increasing the rate at which we make it better, more efficient, make the reach to more people on the continent. Yeah.
So in other words, you're self-sustaining on the part of the infrastructural, issue.
Yes, for us, we see that yes, it's not perfect. We don't expect it to be perfect, but with what we have on the continent, there is still a huge upside. There's still a lot we can do. There's still a huge amount of opportunity there.
All right, very good. Now, Amazon is extensively diversified, looking at TV, entertainment, groceries, apart from mobile banking, etc. Now, does Jumia in the near future plan to diversify beyond the traditional e-commerce market play, and will Jumia be going for a mobile banking license? Hopefully, in Nigeria.
Okay, two things. I'll take it in two phases. The first one is, should we look at other opportunities outside of e-commerce?
Indeed.
Maybe, but the short answer is not now. And that's certainly not our strategy. And that's not what we've promised investors. Why? Because, again, like the prospectus says, and the information we have out there says, we have 4 million active consumers on Jumia today. There's 4 million people who actually have bought something or paid for a service, the transaction has happened. If you're in that market and there are 453 million people who still have access to internet, that tells you this is still a huge amount that you can do within just the e-commerce itself. Just making sure that we have the kinds of services that people want to buy, or the kinds of products that people want to buy, and we're providing a platform that makes it easy for them to transact. That alone is still a huge opportunity.
Yeah.
Okay. Ultimately, strategy is about focus. Okay. You succeed or you fail by the things you said yes to, as well as the things you say no to. So at this point in time, we say to ourselves, no, let's concentrate. Let's at least bring back to our investors a business that is profitable or near profitable by 2022, 2023, just concentrating on doing what we're doing and doing it efficiently and in a manner that is profitable. That's on the diversification part, yes. Then on the mobile banking part, our intention has always been with Jumia Pay that will be an agnostic platform. So in other words, we want to integrate whatever payment method that a consumer has, whether it's money, mobile money service that they're using, or is a bank transfer, or is cards that they're using. We're happy to put all of that under Jumia Pay. Okay. So to that extent, we don't at this point in time require to have a mobile money license on our own. We can leverage the mobile money license of a bank, which we can partner with. So that's the way we are approaching it in a very disciplined way right now. If we try to do everything, it's going to be
I can imagine.
Just bite off as much as we can chew at this point in time.
Very good. Now, let's talk about Jumia shares. How are they doing to date post-IPO? Most tech unicorn shares trend lower after, as it were. So what do you make of this development?
We have actually bucked that trend, I would say. Last trading day, our stock was trading at $46.99. That's ADR, ADS rather. Having said that, our expectation is that the market determines these things. The market goes up, some days your stock shares will go up, and it's not related necessarily to tech or startups. Is the way the stock market operates normally. It could be in terms of reacting to the sector, the performance of the overall sector, not necessarily to Jumia over a period of time, and the investors have many things that can impact the stock price. So rather than look at it from a quarter-to-quarter, or a day-to-day perspective, what we want to make sure is that over time, over years, that we continue to consistently deliver value for investors in terms of the share valuation, the market value of the company.
Very good. Now, earlier on, we were talking about the 4 million active users of Jumia on your platform. Now, competition-wise, how have you fared since inception? And you have a situation whereby there are other competitors out there, and of course, everybody's grappling for a market share of existing users, as it were. So, what's the trend like for you?
Okay, what I would do is share a little bit of what consumers tell us when we run surveys, because ultimately the consumer is the best.
Indeed, the feedback is very crucial.
Yeah, from the consumer. When we run surveys, and we've done a lot of them recently, what we see is that 80% of online shoppers have shopped on Jumia. Okay, in the markets where we operate. And we see that 90% of them tell us that they are repurchasing on Jumia. They have repurchased within the last 6 to 12 months, and 90% of them will recommend Jumia to a friend. Okay. So at this stage where the market is where we want to accelerate adoption, for us that is very important, because that tells us, okay, we have the market share, okay, we have the consideration of existing consumers. We also have the loyalty of those consumers, because they are saying they are recommending Jumia to a friend. 90% of them will recommend. When we look at those who are not yet online shoppers today, okay, and 75% of them already know Jumia. Okay. And 2/3 of them say they are considering to make a, so I know Jumia and I'm considering to make a purchase or a transaction on Jumia.
How do you reach out to the undecided yet?
Great, great. So I was coming to that point, yeah. Now, when you ask, why haven't you shopped on Jumia yet? The kinds of responses we get are, I don't know how to shop online, or I don't know if I'm sure of the quality of the products when I buy them online. I'm not sure if I can check the quality of the products online. Those kinds of responses. Now that tells you this is the equivalent of maybe 20 years ago when in the West, in the US or in Europe, where people were using credit cards for the first time. There was that kind of, I don't know if I can trust this animal, what is this? There's a bit of that anxiety and all that. So, but that's also good because it tells us these are mental barriers. These are not infrastructural barriers. There's no new platform that we have to build to bridge those kinds of barriers. It's really about continuing education to drive engagement and adoption, and also increasing the reach in terms of what kinds of services people can transact on Jumia. So the more I can increase the scope and reach, then the more I can bring in people who, for the first time, just want to test something before they get comfortable, before buying a product or things like that. Yeah.
Very good. Yeah. Now, talking about young entrepreneurs getting started in e-commerce space, where are the quick wins and market openings? Any useful tips for them?
Well, what I always say is, whenever you experience, like for example, if you want to, lately I can share a very recent example when it's trying to get some handymen to do some work in my house, okay, and just the friction that is in that whole experience, either in terms of finding the right person, or it's even in terms of them showing up on time, or in the quality of the work, rating of the quality of the work. Wherever you experience those kind of frictions, right? And you see that it is possible that moving things online, aggregating data, having access to data, and using that data to make the process more efficient, there lies an opportunity. And that opportunity is in everywhere. If I can think about it from all dimensions, whether it's children in school or every single decision we make in Africa today, there are multiple areas where there's still a lot of friction. For me, that tells me there's still a huge upside and huge opportunities for a small startup to come into play. Having said that also, I don't say this because I'm Jumia MD. I think also leveraging existing platforms helps, because if people have already made some investment, you don't need to replicate that same cost again. It's a cost. There's a standard fixed cost which you must bear to run e-commerce. So if there's a way I can plug into what is already existing to the extent that it is possible, why not? It makes the startup phase easier for me. And then at some point, if I think I'm big enough, I can branch out. Yes, why not? Yeah.
Indeed, despite the gains of e-commerce, we, like you mentioned, should also discuss the cost implications as well, which brings out the issue of security in e-commerce retail business. Talking about cyber attacks, it's been quite rampant, although there's a little bit of deviation here. Facebook is still facing its issues, as it were. So what efforts, what fail-safe mechanisms do you have on ground to prevent such incidences?
Okay, I can speak on a general note. Okay. I mean, I'm sure my tech guys know terminologies and way to describe it more effectively.
All right.
But all I know is that from a security perspective, from a systems perspective, a lot of our investment goes into making sure that we prevent such attacks, either in terms of consumer data, the email, phone numbers, transactions data, and all of that. And it helps sometimes also because everything runs in our own platform. Because the more you have disaggregated networks where some data is here and some data is there, the more you open up opportunities for those. But it's an area that we invest a lot in. a lot of, not just in terms of systems or people, also we hire the best talent to make sure that we take care of cybersecurity. And and for the past, I think since we started in 2012, I can see that in terms of security issues or breaches like that, or even fraud-related cases, have been well within what we expect as within what you call industry standards. Yeah.
All right, now let's talk a little bit about the synergy between your platform and consumers as well. How do you handle complaints when it comes to, maybe deficiencies on the part of dispatch riders? We've been hearing some news that probably they're not in tune with the dictates of the company, not arriving on time or giving orders or other giving what they're supposed to deliver. And it's causing some, a bit of disheartening comments, as it were. So how do you handle those complaints, assuage the minds of people and make them feel more confident in the company?
There are many things that we put into place. As you know, when you're running an e-commerce platform, it's a marketplace, and therefore you're dealing with a marketplace of sellers who list their products on our platform. We also have what we call a marketplace of logistics providers also who support the system. Remember when I talked about integrating logistics providers onto our network. So, however, ultimately our responsibility is to the consumer. Okay, and that's why for us, we don't tell the consumer, we just provide you with a platform, you deal with the seller. We take full ownership of the consumer experience on our platform. So that's number one. Now, because we take full ownership, typically there are a couple of things that could happen. It's either, for example, the item arrives and it's not the right size, which is common for fashion items, or it's not the right product, or a consumer just doesn't like it. Now, we provide consumers with 7 days return timeline. Okay. If you take it, if you don't like it, fine, return it. Okay. And in some cases now, depending on the value of the item and the specific customer, okay, because some customers also, as you know, try to take advantage of the system.
They do.
Yeah. So if you have a customer who consistently orders something, the driver shows up, takes the item on time, or has made arrangement for someone to receive on their behalf, and the customer complains that, hey, I'm not happy with this item that was dropped off. We even do automatic refunds before we have even cited the item back. Okay, because we just want to say, you are a good customer, we appreciate your custom, and we trust what you're saying to us. We haven't seen it, the driver has not brought it back, but here's your money back. Okay. And we've also, with the Jumia Pay and the wallet, because Jumia Pay is really a wallet, it makes it also easier for us. So once a customer has requested a refund or a return, it's so easy for us to just refund straight to the customer's account. And then the rest, when the item now comes back, we'll do the proper QC and so on and so forth. Yeah.
So there's that open channel of communication.
So customers can reach us through all our channels. They can reach us through email or the contact call center.
Very good. Now, finally, e-commerce since inception in Nigeria, well, it's still at its infancy and it's still growing. How would you assess it? Has the government provided the enabling environment for it to thrive, as it were?
Well, I would say there's a lot that's been done, but there's still a lot that could accelerate the growth even better. Okay, and one of the things that can actually accelerate the growth is in terms of making sure that we have more people who have access to data. Okay. Now, it's not just for e-commerce, to be honest. The government also has an objective of financial inclusion, right? So reaching more people. There are a lot more people who may not have the opportunity to be reached because either from they're not willing or whatever impediment it is for them to open accounts, bank accounts. However, with access to data, other kinds of services can reach them faster. E-commerce could be one of them, right? So if I'm in a remote area and I'm able to access data, have access to data, and I can get on the internet, I can certainly at least place a transaction. yeah, right, place an order for a transaction. By doing that, I'm creating a data footprint that could be useful for financial services, for maybe a small bank or a micro bank to be able to, a microfinance bank to be able to provide some services to me. Okay, so data, we call it zero data, in the point where you get to a point where people actually pay nothing for the data. So data becomes like, just the railway, right? And then it's really what people do with it. That's where the value is at the end of the day. So that's one very important one that I think will really help. The second one is, I would suggest, is in terms of, I would say, smartphone penetration. A lot of companies are doing everything they can. MTN, Google, a number of other companies are trying to push down the price point of the average smartphone. About 6 years ago, it used to be about $200. Today, it's coming below 36, 18,000 naira and so on. The lower it becomes, and all of that requires some R&D. It's not always private capital that's going to do it. Some government funding needs to go into it. The more you have more people who have access to smartphones and therefore can get access to services, basic services on their phones, the more you increase the number of people who are digitally connected. Yeah, and digitally connected, it does help e-commerce, but I'm not speaking only for e-commerce in this respect. There are other things which it benefits the consumers, yeah.
All right, very good. On that note, Juliet Anammah, CEO, Jumia Nigeria, many thanks for your thoughts on e-commerce in Nigeria. It's always a pleasure to have you.
Thank you. Thank you very much.
We'll have you again.
Thank you.
All right, thank you. You're watching the Global Business Report here on Arise News. Up next, we take a look at the latest developments from Nigeria's oil and gas sector. Stay with us.